South Africa's listed property sector just posted one of the strongest REIT runs in the world. In fact, it's outperforming major markets like the United States, the United Kingdom, Australia, and Japan in 2025. The question is this a once-off spike or a genuine structural turnaround? Let's start with the headline numbers from Global Property Research's market data for November 2025. South Africa's listed property sector delivered about 9.7% total return in November alone, pushing the year-to-date return to roughly 46%. Compare that to a global REIT benchmark that's around 12% year-to-date, and you can see why this is turning heads. Now put South Africa next to major developed markets. The US is cited around 9% year-to-date, the UK around 10%, Australia around 23%, and Japan around 27%. So South Africa isn't just doing well, it's leading the pack. Here's the key: industry leadership is arguing this isn't a one-man bounce. The SA REIT Association describes it as a structural re-rating. Basically, the market is revaluing the sector higher because fundamentals improved. And what fundamentals? Think of the last 5 years as a forced discipline phase. Balance sheets were strengthened. Portfolios were simplified, less clutter, more focus on core assets. Earnings were stabilized through a very rough cycle. In other words, the sector didn't wait for conditions to improve, it prepared for the moment capital came back. But company execution is only half the story. The other half is South Africa's macro risk premium improving in late 2025. 3 developments mattered to investors. First, South Africa exited the FATF grey list on October 24, 2025. That's important because grey listing can add friction to cross-border flows and due diligence. Removal tends to reduce perceived compliance risk and improve investor comfort. Second, S&P upgraded South Africa's sovereign rating on November 14, 2025, which is a major signal in global markets, especially for portfolios that watch sovereign risk closely. Third, South Africa hosted the G20 Leaders Summit in Johannesburg on 22 to November 23, 2025, the first G20 summit on the African continent. Regardless of the politics around attendance and diplomacy, the hosting itself increased visibility and reinforced the message that South Africa wants to be a capital-attractive destination. Now, a professional warning: when you see peak returns, you have to ask what drove them, fundamentals or re-rating. If the move is mostly re-rating, meaning prices rose faster than underlying cash flows, future returns can normalize quickly. So here's what to watch next: interest rates and bond yields. Listed property remains rate sensitive. Refinancing risk, debt maturities, hedging, and interest cover matter. Property type divergence, retail, logistics, office, and residential exposures won't move the same way. Distribution growth versus price growth. Sustainable performance is usually distribution-led over time. This is not financial advice, just the framework professionals use to judge whether a rally is durable. Bottom line, South Africa's listed property sector is outperforming global peers in 2025 because it combined hard internal discipline with a later improvement in the country's risk narrative. If you want a follow-up, I can break down which SA property counters benefited most, what their balance sheets look like, and what the next 12 months could depend on.